Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, April the 3rd, Monday. We are starting a new quarter, a new week, a new month. First day of trading of, remember, a slow, short week because Friday is reduced trading hours. So we have 4 days to continue the momentum and the powerful strength that we got last week to the end of the quarter and the month. So the first thing that we are going to review is ISM manufacturing PMI that came lower than expected, and also the S&P global manufacturing PMI as expected. So this is showing that manufacturing is slowing down and it's aligned with what the Fed want. That should be good news. But first of all, Fed Bullard was talking today saying that the Fed needs rates above 5%. And his forecast, Fed Bullard forecast, that remember is not. He has no rights to vote on the FOMC, but still his opinion is quite important. He says that Fed needs to raise about 5%, and his forecast is higher than the median. So maybe 525, 550. And also said that on rate outlook, market should listen to him. Well, that's his opinion. I agree with him. I think we have to continue raising interest rates, and I hope Fed does that. And this is what analysts are also expecting right now, 55% with 25 basis points for May, and the probabilities are still above 5% for the next two FOMC meetings, and up and from July they are betting on the interest rates cut until December to end the year on 75 basis points lower than right now. I think markets are wrong on this, but we have to wait. What else? Well, OPEC Plus just made a decision yesterday, Sunday, and we are going to see crude oil charts spiking up almost 8% today. They are doing a voluntary cut on the barrel production for crude oil, and this was unexpected, and certainly this puts a lot of pressure on the Fed because higher crude oil prices will push inflation higher and will push a lot of pressure on household and on the economy due to gasoline and on prices on the gas pump. So let's see what happens, because this kind of move is, in my opinion, is quite harsh for the overall economy. And right now, when we were trying to control the inflation and we were having some kind of push down on the inflation, these kind of things might affect the geopolitical tensions and might impact the overall outlook for the inflation and also the rate at which expectations are going to be. I don't know, but this kind of move, we have to follow this. Let's go to the chart and start reviewing the Nasdaq. So this is the Nasdaq. The Nasdaq started, we check the 5-minute chart, started with a gap down during the overnight, and we held basically 13,000. 13,200 was held during the overnight, and into the open, we tried to move higher, but we were basically encountering a lot of resistance, even though Apple was super bullish, but it was hesitant on going higher. And one of the things I was looking at on the Nasdaq was this pivot, pre-market high, this pivot that marks the high on the overnight, and I was waiting to see if we filled basically this gap during the overnight, this gap down. We didn't do that, so I was preparing my shorts, and it was a very clear picture short. I started going short around here, and I covered. It was not perfect by no means, but it's right now trying to hold to form a base around this level of the open. Right now, due to the gap, Nasdaq is minus 0.84% on the day, and the S&P's futures are barely in the green. because this move was quite hard to the downside. So let's talk about crude oil. As I was saying, look at this gap. This was unbelievable. This gap is close to the open. It was 6%, almost 7%, almost 8%. So right now, crude oil is 6.70%, and it's putting, look at this. This big gap on the daily is going to be insane for the future, because this is going to be super bullish. If we pull back, I think a lot of traders and investors are going to buy these dips, because this move from OPEC Plus, I mean, it's insane. We have to really pay attention to this, because this changed the rules of not only crude oil prices, but also the inflation battle that everyone is waiting for. Quite bad on the day, this kind of news. Apple still barely weak, at least holding barely in the red. Microsoft deeper in the red, minus 1.37. Tesla, look at this. Tesla on the 15-minute just up, down. So, well, Tesla has its own catalyst due to Q1 deliverables and some reports regarding, it was expected, the vehicles delivered, but I think it was lower than expectations. Tesla investors always wait for growth, and I think they were disappointed. So that's why they are basically retracing these moves. If we check the daily, this is going to be quite nuts. This push to break this kind of structure and into the 200, really reversal, gap down, and continuation lower. So what else? Amazon, consumer discretionary, also on minus 1.21. XLY is minus 1.19. And this is really, we have to be really careful with this, because XLF is in the green, energy is in the green, staples are in the green, healthcare are in the green, defensives overall are in the green. And that is something that we have to really follow up, because at some point, markets are going to turn defensive. And I think this is today, let's see, one day, energy is just flying, and then we have defensive sector, defensive sector, defensive sectors, and financials. So consumer discretionary and technology are being beaten down, and we have to follow up on that. We have to really pay attention to see if Wall Street is going defensive, and if Nasdaq and overall markets are going to only pull back a little bit, or really start showing signs of bigger fears of recession. The previous move was super bullish, but at some point we are going to retrace. How much? We'll have to see, but some key levels need to hold to remain bullish. If not, then people start worrying about recession again, and yields and inflation, and I mean, momentum to the downside is also dangerous. So let's have patience on that. What else? Dollar is seeing some pressure to the downside. If we check the 30-minute chart, I mean, I was waiting for this fib retracement to hold 102, but it's just pivoting around that. And I think after this move today, this is just broken. I don't think dollar is going anywhere to the upside. This gap was already filled. And I think we are going to need some kind of, at least to break this pivot. And from now, if we break this support down here, I think things are going to be quite dangerous to the downside. We tapped that one and we bought a little bit, but dollar is going to be key to really understand if US economy is going to be down or not as much as people think. So we have some interesting levels until 100, and 100 is going to be super key level. But right now it's seeing a lot of weakness. And along with that, the 2-year yield is in the negative, the 10-year yield is in the negative, and the inverted yield curve is seeing some weakness. So after this big top in tail, look at this super bearish, and this continuation to the downside, I think things are starting to look pretty bad. Something is sick in the economy. September and December yields are increasing, and I think analysts and investors are starting to realize that the Feds may not be cutting anything this year, and that would destroy the bullish momentum that we got on the Nasdaq and on the S&Ps. We still have to see it. We have to be patient, because I think after this strong move, pullbacks are going to be met by demand. And if we want to short this market, we have to wait for key levels. One of the key levels is last week low, 12,600, or at least to remain lower of 13,000 psychological level. And for sure, start seeing this trend line if it's respected, and the 200. Below 200, well, things are starting to look bearish. But until then, we have to be patient. If you want to short the market, you have to be patient to this kind of patterns of slowly grinding up and starting momentum down. This was a nice move, but you have to be really careful. Just scalp or do some quick trades, because right now we are still in a very, very bullish market. Today is the first day in the red, quite in the red for Tesla, honestly. And I think part of the reason is consumer discretionary destruction today after the OPEC Plus and the overall sentiment regarding the demand destruction regarding the crude oil and all the inflation fears. So let's see what happens. We have to see some kind of continuation after tomorrow, but right now we are basing out. Point of control is still down here. We are doing higher lows in this, but let's see what happens and how we end up today. If we make new lows on the day, maybe right now we are 1% in the red. Anything can happen, but I don't think today is a good day to at least neither short nor go long. Just be patient. We are going to chop around, and let's just wait for better days. I think we have to wait for better days. Tomorrow, Tuesday, we have jolts, openings, and another Fed quick speech after lunch. Wednesday, we have non-manufacturing PMI and ADP employment. We are expecting lower employment. That is going to be key to understand. And also on Thursday, jobless claims. And on Friday, remember that Friday is reduced market open, it's a bank holiday. So I think stocks are closed, but futures will be open. But for sure, everyone will be watching unemployment rate that we are waiting to see at least 3.6, the same. If this goes higher, it would be good. If unemployment starts going down, that would be insanely bad. And non-farm payrolls, look at this. We are expecting to see a big crash on payrolls. So everything would remain at least sideways or neither bearish nor bullish until some big news happen. Today, the OPEC Plus and the fears of inflation appeared after the crude oil production cut, but let's see if that continues. But until Friday, we have a lot of days to really pay attention to the market and to be really careful on both sides. That's my advice. And I think that's all. Let's see crude oil. Crude oil remains super strong. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I do go live or I upload new videos. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that we just closed lunch hour into the power hour. Anything can happen, but what is true is that discipline and risk management are key for your success. Pay attention to this week. This is going to be a tricky week after all this bullish momentum. If you are not sure what Your position should be just wait for better opportunities, wait for catalysts, wait for news, and just be patient and manage your position size. Thank you for your time and stay safe, everyone, and see you tomorrow.